What is going on, everybody? Stas here. So we had a pretty decent day in the stock market today. The S&P 500 went up 0.2%. The Nasdaq 100 went up 0.3%. We had the Dow pretty much break even, and the Russell got hit pretty hard. It went down 0.7%. So today we're going to break down some stocks, some charts, my thoughts on the markets, a bunch of earnings reports, plus more. So sit back, relax, hit the like button, check my Patreon out, link down below. If you guys want all my buys, sells, call outs, morning update videos, plus more, all of that's on Patreon. And with that being said, let's get right into the video. So the markets today, in terms of the S&P 500, hit a brand new all-time high. SPY hit $458.49, and it seems like we're straight up breaking out above that 455 level, which was the all-time high back in the beginning of September in 2021, right? And at this point, we're actually pulling back a bit as well. We hit the all-time high this morning, and we saw a bit of a sell-off pretty much all throughout the rest of the day. You guys can see we hit 458.50, and then we ended up closing at about 455.96. And during power hour, mostly in the last 15 minutes of the session, we saw a pretty drastic sell-off. SPY went from 457.40 all the way down to about 455.90. Now we're a little bit above 456, and this is probably in anticipation of the earnings that we have today, which again, we're going to talk about all throughout this video. And one good thing I'm seeing here is, guys, that we closed above 455, and it does seem like buyers do want to step in here at around 455, which was an old resistance. Now it's support. So the bulls overall are still in charge when it comes down to SPY. And for QQQ, let's pop it up. This closed above 478, which is a very good sign considering that was the high in the middle of September. And we do see a nice green candle forming above that point of old resistance. Now it's a new support, which is a very good sign. Buyers are looking to step in. And if you guys saw my video earlier today, we talked about how this ETF got 8, or maybe I think it was 7 cents away from an all-time high. We hit 482.71 at about 10:50 a.m. on the East Coast. And if you guys take a look here on the 4-hour, the all-time high is 382.78. So we got 7 cents shy, and we pretty much filled the entire gap up to that all-time high. So I'm going to put my alert for tomorrow and for the rest of the week. Quite honestly, I'm looking to see if we can break above 383. So I put my at is or above alert at 383, and I'm going to be watching that level very closely on QQQ. So what do you guys think? Drop me a comment down below. What are your thoughts on the markets? Hit the like button. If you guys find value in these videos that I make, I really appreciate all of you guys out there. So I would appreciate it if you hit that like button, subscribe to the channel if you haven't done so already. And now let's get into the nitty gritty, the meat and potatoes, because today is the start of big tech. Well, we did have Facebook yesterday, but today and the rest of this week, it's going to be huge. And I didn't actually look at these reports before making this video, considering it's only 4:20. A lot of these are reporting as I'm actually making this video, so you are going to see a live reaction for me here. So let's go with number one being Google. This stock went up 0.6% on the day. It closed at $27.90, and now after hours, it's pretty much still at $27.90. And let's see on the intraday chart any volatility. If there's any volatility, there is a little bit. It popped up a little bit above 2,800. Now it's back under 2,800. So let's see what they reported. Let's go down here. $27. They did almost 28 bucks, $27.99 in EPS, and that destroyed the estimate. The estimate was 23.47, so that's great. And sales also beat. Fantastic. $65.12 billion versus $63.45 billion estimated. And I've been on record saying many times, you guys probably know this, Google is my favorite stock out there. I own a lot of Google. It's my biggest long-term position. And if I had to own any stock for 10 years, if I had to just pick one, It's going to be Google. It's going to be Google, and I've been on record saying that many times, and I've also been on record saying out of the big tech names, I think Google is the most undervalued. Not saying it's extremely undervalued. I'm just comparing it to the other tech names. We're looking at Apple, Amazon, Google, Microsoft, and Facebook. Out of those five, I believe Google is at the best valuation right now. It's not necessarily undervalued, but out of those five, it's at the best valuation. So Google did pretty well. They beat EPS, beat revenue. Do we see anything for guidance quite yet? I'm not seeing anything for guidance quite yet. But they pretty much reported pretty good numbers, and I'll probably dive deeper. Well, I will dive deeper into this report later on my own time. But for now, Google is trading within this wedge. Lower highs, higher lows. It's right around the moving averages on the 4-hour chart. So I really want to see direction here. Do we end up breaking out of the high point from the middle of October at about 28.80? Do we see a leg up out of the top of this wedge? Or do we end up collapsing and maybe taking out the lows from the beginning of October, being in the mid-2600 level? We just need to see direction. And quite honestly, selfishly speaking here, I would want it to go lower so I could buy more and add more to my position. So Google, shout out to all the shareholders out there, myself included. We're doing pretty well right now. And the earnings, not bad. Pretty solid at that. So let's go to Microsoft, MSFT. Let's see if they reported yet. Seems like they did based on the price action here after market hours on the stock. We closed at $3.10. We closed up about $2 per share today. And now after hours, we hit an all-time high of $315.50. Now we're hovering around $314. So let's see what they reported. Let's pop it up on the live news tab. And that's a big push up after hours, guys. So these earnings probably are good. EPS came in at $2.27 versus $2.07 estimated, so they beat EPS. Revenue came in at $45.3 billion versus $43.97 billion estimated. So like Google, Microsoft also had a double beat, which is good. And overall, guys, we are looking at these earnings very closely, not only to see if the companies are doing well, but if the overall economy or the overall, as a whole here, are these companies doing well? It's not just about the individual companies, but kind of the market as a whole. If these companies were missing earnings, missing revenue, that'd be a big red flag. But the fact that Google and Microsoft so far, the ones that we've covered, are beating earnings, beating revenue, the stocks are moving up, that's good for the overall market. And I've mentioned this before. You guys probably know this already. These stocks have a huge weighting in the overall market. So if we're moving up on these stocks, you bet your the overall markets are going to be moving up as well. So Microsoft is crushing it. We actually called this out maybe a week or two ago. Actually, not even 2 weeks ago. It was probably a week ago. We called out the inverse head and shoulder here. Let me outline it again because it looks like I cleared my drawing set. You guys can see, and you remember if you watch my videos, we called this out and we called out the breakout. So if you caught Microsoft, kudos to you. You made some good money. Let's go to AMD, Advanced Micro Devices. They also reported earnings today. Did they do it yet? Actually, it doesn't seem like they reported earnings yet. Or maybe they just did about 8 minutes ago. EPS came in at 73 cents versus 67 cents estimated, so they beat EPS. Revenue beat as well, $4.3 billion versus $4.12 billion estimated, and they see Q4 sales of around $4.5 billion, plus or minus $100 million, versus the $4.25 billion estimated. So they're guiding up for sales for Q4, which is solid, and they raised the full year 21 revenue growth guidance from 60% to 65%. So that's great. They beat EPS, beat revenue, guided up for revenue for the next quarter, and they're guiding up for full year 21 sales in general. I can't complain. And this stock has gone up so much. It begs the question, did AMD have this priced in already, considering it's gone from $100 about 3 weeks ago all the way to $123 at the close today? So it's ran up 20+%. it begs the question, was this already priced in? Because the stock really isn't moving much after hours. I mean, it's moving a little bit. You guys can see it closed at 123. It popped to 124, which is not that crazy. But if this was being down, let me tell you, let's say, for example, AMD was not at 120. Let's say it was still at 100 and they reported these earnings. I would expect it to be up 5-10% after hours. But now that it's ran up a lot already in the past 2-3 weeks, it's up 20%. It makes sense that it's not ripping even higher after hours, guys, because it's just the reality of things. Stocks don't just rip up after earnings all the time. A lot of the time, it's already priced in. So keep your eyes on AMD. I wouldn't rush into it here. It's a bit overbought in my opinion. And you guys in my Patreon know I killed a trade on AMD. This is one that I had months ago at 77 per share. And I sold out at 118 back in August. And I've just been out of AMD since. And now in hindsight, should I have held? Probably, but then again, you have to ask yourself, what did you do with that money, right? And not just me asking myself, you guys have to ask yourself out there as well. Just because you got out of a trade and it went higher, you shouldn't get down on yourself, because what did you do with the proceeds from that trade? Did you take that money and put it in another stock that did well? You might have, and in that case, it's probably good that you took the money out and put it into something else. Or did you take it out and sit in cash? It all depends on what you did with the proceeds. And for me, I took the money out, I put it into other stocks, made money. So I'm very happy with my trade in AMD, and I'm still waiting for my re-entry. I'm still sticking to my guns. I want it down to 85.90. It might not get there. If it does, I'll be ready. If it doesn't, it's all good. No need to force it. So AMD reported solid numbers, and so far, guys, these stocks are doing well, man. These companies are reporting good earnings. So let's look at Visa. They just reported as well. They did EPS of $1.62 versus $1.54 estimated. So they beat EPS, and that's on an adjusted basis. And sales came in at $6.6 billion versus $6.53 billion. So they also had a double beat. And did they do guidance? Let's see here. I'm not seeing anything on guidance. Oh, they raised the dividend. Okay, that's good. 37 cents. And I think Visa is one of those companies that has a very minuscule dividend. Let me pop it up on my Yahoo Finance app. Bear with me here, guys. It's got to be like 1%, probably less. It's one of those stocks that has a very low dividend. Oh, it's 0.5%. So yeah, it's $1.28 dividend right now for the year. According to Yahoo Finance. I'm not sure if that, updated. Probably not, considering they just raised it about 15 minutes ago. But still, it's hovering between 0.5, 0.7% per year, which is really nothing. But still, I guess it's kind of a cherry on top for owning Visa, which I guess you can't complain if you're owning Visa. But then again, you're not buying Visa for the dividend. You're buying Visa because it's a growing company, and maybe down the line the dividend is going to be higher. And oh, wow, look at that. So they beat top line, bottom line, and they increased the dividend, which I just said, by 17%. That's a pretty nice dividend increase. And the way I look at dividends, guys, a little bit of a side tangent, is you want to see them increasing the dividend, the company increasing the dividend more than what inflation is. It's kind of like your salary, right? If inflation's 5%, which it is right now, and your salary per year is being raised by 2%, it's not beating inflation. It's the same thing with dividends, right? If you own a dividend stock that's increasing the dividend by 2%, which I believe AT&T is one of those, they barely raise a dividend every year, but they do. If they raise it by 2%, you're pretty much losing out. So you want to see companies raising that dividend more than what inflation is at that particular time period, which right now is 5%. So Visa increasing at 17%. Not too shabby. In fact, it's very good. So shout out to Visa. The trend looks good. I see more upside here. We're seeing a golden cross. We took the highs out from the end of September. I think this stock could go a lot higher. I think there is upside towards that 245, 250 level, which is the all-time high from back in July. So let's go to Twitter. This is going to be interesting because you guys remember what happened with Snapchat. The stock went down 30%. In full disclosure, I bought that dip. I'm up on my position, and I'm selling covered calls that expire on the 29th of this week. I bought them, or I bought the $58 calls? Yeah, I believe it was $58 calls. Or I sold them, rather. I didn't buy them. I'm not a big buyer of options. I sell options, and all you guys in my Patreon know that. Shameless plug. So let's go to Twitter. TWTR. This is one that, oh wow, it's up a little bit. So it's interesting because Snapchat, when they reported those abysmal numbers, and they weren't that bad. I think it was an overreaction, hence why I bought the stock. But when they reported those numbers, Twitter tanked, Facebook tanked, a lot of the social media stocks tanked. I think Pinterest probably fell as well. I forget exactly. But yeah, they didn't do well overall. So now Twitter's up. I mean, Twitter closed at 61.40. Now it's up to 63.40 after hours. It is gaining a little bit of steam. So let's see what they reported. They did, where is it here, guys? Let me see here. Wow, that's a big miss. So they had a surprise loss by the looks of it. They lost 54 cents per share versus the 15 cents estimated. So that's a miss. Sales beat, but barely. I mean, sales came in at 1.28 bill versus the 1.28 bill. I'm not sure why it's saying beat here. It should say in line with estimates. But okay, missed EPS. Sales in line with estimates. Now let's see the daily active, monthly active users. So average monetizable DAU reached 211 million, up 13% year over year. Not too bad. That's in Q3. Let's see here. Average international monetizable DAUs 174 million, up from 152 million year over year, and their guidance is pretty much right in line with estimates for Q4 in terms of revenue. They see 1.5 to 1.6 billion versus 1.58 billion estimated, and operating incomes between 130 180 million. Okay. So not too bad, but I wouldn't say it's a great earnings report either. But the fact that I think the reason why the stock's moving up, guys, is they didn't miss revenue like Snapchat did. Snapchat, if you guys remember, they missed revenue, and their guidance for the next quarter was lower than expected. That's why the stock got destroyed. Twitter, guidance for the next quarter is pretty much in line with estimates, and the revenue for the past quarter was in line with estimates, which is why it's kind of like, okay, sigh of relief rally. Let's start moving back up. That is why we're seeing Twitter up about a little less than $2 as of now. And overall, the trend, we're still on a wedge, so you guys got to be mindful of that. We got to pick direction on Twitter. Robinhood, HOOD, they reported today as well. This is a stock that I would not own for the long term, but I would consider trading it. And they actually missed revenue, or EPS rather, and revenue. Wow. They did EPS of negative 206 versus $1.36 in the red, so they missed EPS. Did I say revenue? I meant EPS, guys. They missed EPS. Sales came in at $365 million versus the $431 million estimated. So they missed by a wide margin on sales. And transaction-based revenue is up 32% year over year. And they see Q3 sales. Oh my goodness, that is just horrible. Or rather, Q4 sales. They see Q4 sales of less than $325 million versus the $500 million estimated. So the sales guidance is abysmal for the next quarter. They see full year 21 sales less than $1.8 billion versus the $2.02 billion estimated. So full year 21 sales is abysmal as well for guidance. So Robinhood clearly dropped the ball on this report. They missed on all aspects. Guidance for the next quarter, full year 21 guidance, EPS for this quarter, past quarter rather, revenue, they missed everywhere. So I would think this could go lower. It closed at $39.50. Now it's trading at $36.70. It's moving down. It hit $35.60. So be careful with this. I wouldn't buy this dip, guys. I would wait a little bit, let the dust settle, and we'll see where it goes from there. UPS on the flip side, they're crushing it, guys. They hit an all-time high today. UPS went up 7%. They hit $220 per share. And let me double check. Is that an all-time high? Probably. Yeah, it looks like it is, guys. So UPS hit an all-time high. They did adjusted EPS of 271 versus 254 estimated, so they beat EPS. Revenue came in at 23.2 billion versus 22.56 billion estimated, so they beat revenue, beat EPS, and I got to be honest with you guys, this is one that, yes, by all means, it's crushing it, but it's overbought. It needs to come back down a bit, come back to earth. It needs to cool off, and if it comes back low 200s, 190s even, by these moving averages on the 4-hour chart, it's going to be a buying opportunity, a dip buy opportunity. But in the meantime, I'm just sitting on my hands, sitting on some cash, waiting for it, and we'll be patient. And if it doesn't come back down, it's all good. We'll move on to the next. Kind of like what I said with AMD. There's always another opportunity. There's no need to force it. And actually, let me see FedEx today. Did they move up on this report? FedEx moved up a bit, and full disclosure, I actually bought FedEx about a week or two ago in my long-term account. I think I bought it at like $228, so I'm already up about $8 to $10 per share on that position. And yeah, I think FedEx could follow, but we all know what's going on with FedEx, UPS. These companies are under a lot of heat. Even though UPS just hit an all-time high, don't get it twisted, guys. They're still under a decent amount of heat right now. And there's one more that I want to go over, Enphase, ENPH, and maybe we'll do a bonus one as well. Enphase, look at that. This is one that I posted on Patreon earlier. I called it out at 173. Now it already hit my target of 190, just like that. So they probably crushed earnings. This stock's going ballistic right now. You can see that here on the intraday chart. Live news came in. Let's see here. EPS came in at 60 cents versus 48 cents, so they beat EPS. Revenue came in at $351.5 million versus $343.15 million. So double beat on Enphase. They see Q4 sales of $390 to $410 million versus $370.8 million estimated. So double beat. Q4 sales guiding up. Can't complain. Very good report just from a brief glance on Enphase. And this one's just straight up breaking out. It's out of the downwards channel. It's above both moving averages. Now we're actually testing in real time that 190 to 195 level, which was resistance in the beginning of August, which if we break that into the 200s, that is where we could start gaining even more momentum. And believe it or not, it's not very overbought yet. The RSI, sure, it's on the more overbought side, but it's not screaming red on the RSI, so there could be more upside. And if you guys stuck till the end, screw it, we'll do one more. And let me know in the comments if you guys did stick till the end. Make sure to smash the like button as well if you guys are finding value. Lockheed Martin, oh man, this went down 12% today. They dropped the ball. EPS came in at $2.21 versus $1.97 estimated. Revenue missed by a wide margin. $16 billion versus $17.12 billion estimated. So they beat EPS, but they missed revenue and they cut sales for the full year of 21 from 67, or they're looking at 67 billion sales roughly versus the 68.4 billion estimated. So this completely dropped the ball and it's very oversold now. So I wouldn't necessarily jump in and buy it yet, but I would give it a little time for the dust settle, for the dust to settle, and then maybe we could get some sort of relief rally. And I'm going to be watching Lockheed the next couple of trading days to see exactly what ends up happening. So guys, that's it. I'm going to wrap it up there. If you enjoyed this video, make sure to hit the like button, subscribe, drop me a comment, and check out my Patreon. If you guys want all my moves, my buys, sells, call outs, morning update videos, plus more access to me, all of that, that's on Patreon, link down below, or you can go to stocksurfest.com/Patreon. Make sure to also get your $30 from M1, your 2 stocks from Webull, up to $1,600. All that's linked down below, and that's it. I'll catch you guys in the next video. Check out the one I made from earlier. If you didn't, I'll pop it up here. I'll see you guys there. Thanks for watching again. As always, keep crushing the markets. Stay safe out there. Peace out.